get our next guest in now to tell us what the mood is like. Sanjeev Prasad, the Kotak Institutional Equities, joins us now. They have a conference that has kick-started today called Chasing Growth 2014, and he joins us from that conference. Sanjeev, hi, good morning. I'm getting a lot of feedback from the conference that the mood is looking extremely good. You have more than 90 companies and 350 investors attending the conference, and a good day, you know, it's the vote on account today. So what's the mood like amongst the conference participants as we head into the important event today?
Well, I guess people are more focused on the longer term events, so are evaluating how, India moves from here to the next 2-3 years, whether the challenges which India had faced in the last 2-3 years, whether those are firmly behind us. And it looks like that's the case. At least people seem to be in a lot more constructive mood compared to, let's say, 6 months back when we were looking at serious macroeconomic challenges. I think in the last 4 or 5 months, given the efforts put in by the government and RBI, a lot of the challenges have been, I would say, partly overcome, especially the current account deficit, which no longer looks like a challenge. And if you look at the other parameters, most of them seem to be heading in the right direction. Inflation is coming down. Fiscal deficit, and we see the numbers today for 2014 and 15. They seem to be again headed down from a high of 5.7%, which you saw in fiscal 2012. And growth seems to be now looking like we recover in fiscal 2015 and beyond. So I think all in all, people seem to be in a lot more constructive mode. Maybe not enough to jump in and buy. Obviously, you have a big event coming up in April, May in terms of the national election. So people will still wait and watch. But I think as far as the mood is concerned, a lot more positive compared to where we were 3-4 months back.
Okay, Sanjeev, let me pick up from what you were speaking about fiscal deficit. The one fear could be, and I hear it from other economists, that the finance minister may actually do a lot of, the correct word is fudging really, but push on a lot of expenses to the next year. You track, among other things, fuel subsidies very closely. The allocated amount was 65,000 crores. The arithmetic shows that including the deferral from last year, it is 1,27,000 crores. Now, some deferral is naturally there for the fourth quarter. But if there is a big deferral, will you take it badly? Will markets take it badly?
No, I think this has become a recurring thing in a sense. If you look at that 65,000 crore number for fiscal 2014 budget estimates, 45,000 crores pertains to fiscal 2013.
Yes.
So I would not be surprised to see a similar number being rolled over to fiscal 2015.
No, Sanjeev, my point is 45,000 crore doesn't suffice now. Now if he has to reach 4.7 or 4.6 or even 4.8, he may have to push in 65,000 crore, 70,000 crore. So if the number is more than that 40,000 crore which he pushed last time, and say 30,000 crore in fertilizer which he pushed last time, if the deferral is more, and if the net fudging is more, then will people take it badly?
No, if I look at the math we have done, it looks like it will be a similar number, even though that 65,000 crores on a revised estimate would be more like, somewhere about 85,000 crores as far as our math is concerned. But despite that, we are getting to about 4.8%. So if the finance minister wants to show a lower number, then maybe the amount of deferral could be higher. So, but I think you can still get to 4.8% given the combination of one-off revenues which has come from some of the divestments, higher dividends and telecom auction spectrum, and also, of course, planned expenditure is going to be cut significantly. Latha, the more important thing is, are we headed in the right direction in terms of some of the policy initiatives? And I take heart from the fact that you have seen diesel deregulation every month, half a rupee, despite all the hiccups of state elections and a bad outcome as far as the central government is concerned in the post-state elections in December. Despite that, we are seeing a 50 paisa per month price increase, and if we continue with that, then I think in one year's time, diesel deficit will come down pretty significantly, somewhere about 25,000 crores, which is, a very small number. More important, whosoever the next government, if it continues with the implementation of the two longer-term measures, such as implementation of GST and direct benefit transfer schemes, I think fiscal deficit could come under control starting from fiscal 2016. I think 15 will still be on the higher side because you'll have the challenge of Food Security Act, so some higher subsidy from there. And of course, on the fertilizer side, because of higher gas prices, you will see about 10-15,000 crores of increase in the fertilizer subsidy. But I think the general sense is we are heading in the right direction, and that's where I draw my somewhat positive view from.
All right, Sanjeev, how do you really approach the next 3 months before the elections are out? What would you go heavy on, and will all that change dramatically depending on election results?
I think as you look at two factors. One is what are the expectations before the elections, and then what is the outcome of the elections. So at this point in time, I think the market is still a little bit nervous about the outcome of the elections. Expectations are low. Obviously, to some extent also capped by the fact that you have an ongoing emerging market crisis, which is probably resulting in low sentiment for emerging markets in general. So the good news is that as of now, the expectations are low in terms of formation of stable government. And if we have a right outcome in the sense we have a stable government, I'm somewhat a political, I really don't care, which is a new government, but as long as you have a stable government which can continue with the right economic policies and continue with some of the economic reforms we have seen in the last 12-15 months, whether it is fiscal consolidation, some efforts being made to revive the investment cycle, improvement in governance, etc., then I think growth will come back. So the way you play it is, if the expectations are low going into elections, maybe because of the continuation of emerging market crisis, then you go somewhat long on some of the domestic cyclical sectors just before the elections. But if you see let's say the mood becoming more buoyant because the emerging market crisis, let's say, gets resolved, and suddenly people start getting a little bit more euphoric on the outcome of elections, and some of that starts getting reflecting in the stock prices, domestic cyclical sectors, then I think one needs to be a little bit more careful, because it's not necessary that you will have the right outcome. So it depends on the combination in terms of what is the expectation before elections, and what's the outcome of the elections.
Sanjeev, even that is a big call as we go into election. There are about good two to 3 months to go for that. What's your call over the next 2 to 3 months? If this emerging market crisis was to continue, do you think the Indian market can still be resilient and outperform in the face of negative FII numbers? Or do you think there's a chance that elections notwithstanding, we could still have about 5 to 10% correction?
If the emerging market crisis continues, then I think the sentiment will be in general poor for all emerging markets, and India will be, put in the same bracket. It's likely that the Indian market will outperform the emerging markets, but I am not very sure you're going to get too much of an absolute performance in that case. And the interest in India will still be restricted to, on a top-down basis, some of the outsourcing names and good quality companies. So effectively, it will be confined to consumer IT, pharma, and some private banks, which is what has been the market for a long time. So if this market has to become a more broad-based market, in sense more interest across sectors, then I think you need clearly a good outcome to the elections in terms of stable government and economic agenda being, the right thing, in the sense, it's a agenda which is friendly for business and investment, etc. So if those things fall into place, and as I was saying earlier, you can see a much more broad-based rally after the elections.
All right, Sanjeev. Thanks so much for joining us and giving us your view, and hope you have a great conference. We'll, of course, touch base with you again once the conference is over. Thanks so much for joining us. Well, that's the word coming in from Kotak. We'll take a break.